Welcome, everyone, to the Settle In live session. My name is Maria Sigalas, and I'm a program officer for financial capabilities with the International Rescue Committee. We've partnered with Settle In to offer a two-part series on taxes in the U.S. Please remember, when commenting during this live session, not to share any personal or confidential information as we are public-facing. In today's session, we'll give a general overview of taxes, including different types of taxes, what taxes pay for, and how we pay taxes throughout the year. Part 2 next week will explain how to prepare for yearly tax return filing, including who needs to file, what documents you should have, where to go to get your taxes completed, and avoiding tax-related scams. Let's start with the big question. What are taxes? Taxes are money that is paid to the government to help pay for different government services and goods. Because of the different levels of the US government, you pay taxes to the federal, state, and may even pay taxes to your city or local government. At a national level, taxes are monitored by the Internal Revenue Service, or the IRS, and on a state level by your state tax authority. Taxes are important in many ways. The first being that this money finances government programs and services which most of us use day to day. For example, schools, public libraries, or fire departments. These services are meant to support services that we all share together as a community. Paying your taxes is also considered part of our civic duty in the US. It's required by law and is a contribution to your community. Not paying your taxes can have negative repercussions. To be eligible for certain benefits, like Social Security benefits at retirement, you have to show you've paid taxes for a certain number of years to be eligible. Lastly, if you're completing certain immigration applications or status changes, they may ask to see records of your tax returns or show you've paid taxes. To avoid any stops or pauses in that process, it's good to pay those taxes and have that record. So, what happens if you don't pay your taxes? There are some serious repercussions if you do not pay your taxes when required. First, there are monetary penalties and fines. You'll have to pay a fee for paying late or reporting incorrect information. These fees are usually a percentage and billed every month you don't pay or report the correct information, so it can become a large amount very fast. If you continue to not pay, the IRS can remove money from your paycheck or freeze your bank account until you do pay. Another thing to consider is that because taxes are considered a civic duty, when you're applying for certain immigration status changes, like for citizenship, they consider your taxes in the process. Not paying could create difficulties for you when applying. Lastly, not paying your taxes is considered a crime, and the government can decide to press criminal charges if you do not pay. With this in mind, it's really important to pay your taxes so you do not run into any of these negative repercussions of not paying. There are a lot of things taxes pay for. Some common services that tax money is used to pay for include schools, public libraries, parks, repairing and maintaining roads, your local fire department, and police. Taxes also pay for other programs like public benefits, Medicaid and Medicare, veterans benefits, the military, and the salaries of local, state, and federal representatives and politicians. Some of these are paid through federal taxes, while most of what you use day to day is likely funded by your state and local taxes. Each state and city has its own way of using their tax dollars. You might hear in the news when your city's coming out with a new budget or has a budget vote, and you can learn more about how that money is actually used locally. This information is made available to communities because at the core, you're paying for these services, and governments must answer to their constituents on how they're using their money. Taxes can be broken down further into different categories or types of taxes you're paying. The most common tax you'll see day to day is sales tax or consumption tax. When you buy something, there's a percentage of tax added to it, which usually goes to your state and local government. The big one that most people think about is income taxes, which are taxes on the income you're earning. The federal government and most states have income taxes, although there are some states where there is no state income tax. The rules and rates vary between individual states and the federal system. Next, we have Social Security tax, which provides assistance for people with disabilities or people that have reached retirement age around 67 years old. To qualify for full Social Security benefits, you'll have to show that you worked and paid taxes for about 40 credits, or what amounts to about 10 years over your lifetime. For people arriving to the US later in life, it's especially important for you to pay taxes to make sure you hit that 10-year or 40 credit mark to receive your full benefits. There's also Medicare tax, which covers medical insurance for people as they get older. Property tax is paid if you own land, a home, or in some states, you may pay property tax on your car. There are other types of taxes, but these are the main types you'll likely see. Similar to how tax money is spent, federal, state, and local governments also set the tax rate for each of these categories. Because of all this, how much you can expect to pay in taxes is going to be different for everyone. The main factors to consider when thinking about how much you'll pay in taxes are first, where you live. Each state and local government sets their tax policy and tax rates. For example, someone in New York is likely to be paying a different rate than someone in Virginia, for example. Your income level. Tax rates also differ based on your income, with certain income ranges being charged a different tax rate than others. Additionally, your income may qualify you for special programs or credits that can reduce the amount that you owe. Another factor that is considered when looking at your tax liability is your family composition, namely, how many people are in your family that you're supporting with your income and how you report this to the IRS. When you complete tax forms, you'll select your filing status: single, married filing jointly, married filing separately, head of household, or qualifying widower. Each status comes with different tax requirements. Additionally, you're asked to report how many dependents you care for, children or elderly, in your household. All of these factors go into calculating how much you'll owe for your taxes. To find tax rates in your area, you can go to the IRS website at irs.gov, go to your state or local government websites, or you can contact a tax professional for advice. You can also use a tax calculator to estimate how much you may be paying in taxes, although it'll be more accurate when you have all of your information together in one place. The most important thing to take away here is that how much you pay depends on your individual situation, but you can be proactive by using these tools to be informed and prepare. Now that we have all this background, let's talk about how you're actually paying these taxes. We're usually paying taxes throughout the year. First, we're paying sales or consumption tax on any purchase we make. If you own land or a home, you'll pay property tax. In some states, like we said, you might pay property tax on your car. How you pay your property tax may differ based on your location and situation as well, but there's always an option to pay monthly or at certain times throughout the year. If you're an employee of a company, you're also having your taxes taken out of your paycheck each pay period. If you're self-employed, for example, you own a business, work as a contractor, or do gig jobs like Uber or DoorDash, your taxes are not automatically taken out of your payment, and you have to report this income to the IRS yourself and pay your taxes quarterly. We'll look at these two areas in a little bit more detail further in the presentation. We also file a tax return at the end of the year, which tells us how much we're required to pay in taxes and compares that to how much we actually paid throughout the year. The return tells us if we need to pay more or if the government owes us money. This process is called your annual tax return and is completed between the end of January to mid-April of the following year. So your 2022 annual tax return would be completed starting around January 24th and until April 18th of 2023. If you're filing as a single person and earned more than $12,950 from a job or over $400 from self-employment, you're required to complete an annual tax return. Keep in mind that this also depends on your family size. So if you are married and filing together, you're actually required to file a tax return if you make over $25,900, and it's higher if you're over 65. If you didn't earn these amounts, you aren't required to file, but there are some benefits you may be missing out on, like the potential to get a refund or money back after filing. Part 2 of our series will do a deeper dive into your annual tax return, your benefits of filing, and what you'll need to do to prepare and resources for you to complete your return. We'll talk about the taxes you're paying as an employee of a company throughout the year. When you start a new job with a company, they're going to ask you to complete some employment paperwork, including tax documents. A W-4 form is the federal tax form, which tells your employer how much to withhold from your paycheck for taxes. On this form, you'll put your personal information, including your social security number, that filing status we talked about earlier, any dependents you care for, and if you're working multiple jobs. That information is used to determine how much to take out of your paycheck. In addition to the federal form, you might get a state and even a city or local form asking similar information to decide how much to hold for your city, state, and local taxes. Again, if you're curious about how much the taxes are in your area, you can use some of those online resources we shared or go to those tax calculators to give yourself an estimate. At the end of the year, your employer is going to give you a form called the W-2 form, which says how much you paid in taxes from your paycheck for the whole year. You'll need this form to file your annual tax return. A little way to remember is that you complete a W-4 form before you start working and a W-2 form to complete your annual tax return. Your employer is required to give you your W-2 by January 31st. Let's take a look at an example of what taxes look like on your pay stub or pay statement. At the top of the pay stub, we have all your information, the company information and the pay period. Below, we have your hours and your earnings. This person makes $16 an hour for 40 hours a week, and they got a little bit of overtime, which is great. This person is based in New York, and below their earnings, you can see the taxes they paid. As you see here, they took out federal income tax, state income tax, Social Security, Medicare, and then some other New York State specific taxes for family leave and disability insurance. So the total this person is paying out of their paycheck towards taxes is $146.39. Now, in this other area, it lists any other deductions they have taken out of their pay stub, such as medical benefits. We have a video on www.safeirc.org that goes into reading your pay stub in more detail. So here we have your total earnings before taxes at $760. This is called your gross earnings. Then below, it lists the amount you'll receive after taxes and other deductions, which is called your net earnings. Taxes on this person's paycheck were $146.39, and the deductions were $125. So this person's net earnings, or the amount they will actually take home, is $488.61. We wanted to share this for two reasons. The first is if something doesn't look right on your pay stub and you have questions on what's being removed from your paycheck, you should speak to your employer to explain. It's also important to know how much you'll have at the end of the pay period after taxes and deductions, so you can accurately budget your household expenses. Now we'll talk a little bit about taxes if you're self-employed. Self-employed means you're not an employee of a company. You may own a business, be a contractor, work gig type jobs like Uber, DoorDash, Amazon, Flex, or receive payments for other goods and services another way, like eBay, Etsy, Airbnb, or Venmo payments. This also includes cash payments. As someone that is self-employed, you're not an employee of a company and are not being paid by a company through a payroll service. People that are paid directly through a company through payroll usually have a set pay rate, hourly or salary, and they'll have taxes directly removed from their paycheck. If you receive self-employment income, you have to report your taxes yourself to the IRS. If you make more than $400 a year from self-employment, you must report this income quarterly to avoid a penalty from the IRS. To report this income, you'll want to keep track of the profits you're making and any business expenses, then put that money aside to pay your taxes. Put this money somewhere safe where you won't touch it, like a savings or a separate account. We generally recommend putting about 25% of your profits aside to be safe and using a tax calculator if you want to estimate a more exact amount. The key thing to remember about this as someone who is self-employed is to stay organized. Keep record of everything you earn and spend on your business. Keep all receipts and documentation to support your tax reporting. So quarterly taxes are due on April 15th, June 15th, September 15th, and January 15th. To pay these taxes, you can fill out the 1040 ES form on the IRS website and pay the estimated amount directly to the IRS on their web portal. If you need any assistance in this process, you can reach out to a tax professional. Our best advice for you if you're self-employed is to stay organized by tracking your business profits, expenses, and mileage if you're driving for work as you go, putting aside money specifically for taxes, and paying quarterly to avoid any additional fees. Now that you have some background on the tax system and how we pay taxes throughout the year, part 2 of this series next week will review preparing for your annual tax return. We will post a link for that event in the comments so you don't forget to attend. For more financial classes on topics such as this, or to discuss your individual financial situation and goals with a financial coach, find us at safeirc.org, where you can see our upcoming classes, watch a video, or contact us directly to schedule an appointment. I'd like to thank you for joining us for the Settle In Live event. We covered a lot of information. You can return to this recording after the event to review the information again. We also encourage you to follow the Settle In Facebook page for the latest info you need to know as you adjust to your life in the United States. Thank you.